Good evening and welcome to this edition of Capital Market Live on Channels Television, where the market speaks and we definitely will analyze. I am Will Ibong. Let's begin with European stocks, which closed lower on Friday. They revised their gains, that positive start to the session, because of oil prices that resumed rally amid the ongoing war in the Middle East. Capital markets are capping off a volatile week that saw a sell-off grip assets across board following the outbreak of the US-Iran war. Now, stocks listed in the Europe Exchange ended Thursday's session broadly lower as uncertainty around the conflict in the Middle East lingered. Now, the DAX closed in the red. That was at 591 points. That was nearly 1% down. We saw the FTSE also 1.24% down, and the CAC 40 in France also down 0.65%. Now, let's look at Asia. They managed to stage a late comeback on Friday after Wall Street declined on worries over energy supplies. Now, South Korea's Kospi, we saw that reversing course to finish marginally higher at 5,584 points, now marking its best day since 2008, now in the prior session. And Japan's Nikkei 225, that rose 0.62% to close at 55,620 points, also reversing earlier losses. Hong Kong's Hang Seng Index, we saw that up 1.72% at 25,757 points, extending gains from Thursday, and the Shanghai Index was also up 0.38%. Now, stocks fell Friday, adding to their weekly declines. That's looking at US now. Oil prices spiked. Traders reacted to unexpected drop in US jobs data. Dow Jones, we see that down nearly 1%. Nasdaq also in the red, 1.59%, and the S&P 500 down 1.33%. That's the lowest. S&P 500, Nasdaq Composite, the two had shed 1.7% and 1.9% respectively, and that was the absolute lowest levels for the week. Now, the Nasdaq, let's move down to Nigeria, where we see the NASD Securities Exchange closing the week higher. The index was up by over 3.1% to settle at 4,210 points. That's the market cap stood at 2.52 trillion naira. That's up 3.26%. The trading activity, we saw that mixed volume was down about nearly 61% at 13.02 million units traded. We saw value also down more than 0.5%, 60.35 million naira. We say deals up 218. Let's look at the gainers for the week. We see First Trust Mortgage Bank on that list, Central Securities Clearing Systems on that list, and Double One PLC also down. Let's look at the losers. That was led by Okitipupa All Palm PLC, leading that pack, down nearly 8%. Industrial and General Insurance also on that list, down 6%, and Afriland Properties also on that list. Activity chart, that's talking about the most traded securities for the week. We saw Central Securities Clearing System, and that's because of the sell pressure on that. Friesland Campina Wamco also on that list, and IGI also on that list. Now, let's get to the NGX, the big guy. We see that closing positive for the week, rising 0.15% to settle at 196,968 points. Market cap 126.437 trillion naira, up 2.16%. However, activity was mixed. Investors traded 3.69 billion units of shares, lower than what we saw last week. Also, the market value closed in the red at 117.68 billion naira. Total deals was also up, so that 370,980 there, closing in the green. Looking at the sectors, also mixed performance there. We see the banking index up 0.24%. Consumer goods was down. We see that 0.09%, and industrial was also up nearly 4% up. Oil and gas was near the outlier there, 9.43%. I would say insurance down 1.88%. Top gainers for the week, that included Fortis Global Insurance PLC, Premier Paints PLC, and Eterna. Look at the losers now. Let's look at that very quickly. The heaviest declines came from McNichols PLC. That was down 24.4% to close at 6 naira 40 kobo. We saw Mercure also down 18.92%, and Multiverse Mining and Exploration was also down 18.72%. A lot, very eventful week, a lot happening in the week, but we're going to be looking at more to come there. And the Central Bank of Nigeria, that's really good news for markets, saying that 30 banks have met its new capital requirements as part of an industry recapitalization program ahead of the March 31st deadline. Very close, so we're getting there. And the recapitalization drive launched in 2024 aims to strengthen the stability and resilience of the banking sector by ensuring lenders raise enough capital through rights issues, IPOs, and private placement. Now, so far, 33 banks have raised additional capital, with 3 still undergoing verification before final confirmation. Now, the CBN says it's very important that the exercise is progressing steadily and that the Nigerian banking system remains stable and sound as regulators continue close supervision to ensure full compliance before the end of the recapitalization timeline. And to discuss this, joining us to discuss this and more is Mr. Ambrose Omordion. He is the Chief Research Officer in Invest Data Consulting. Mr. Ambrose, it's always good to have you on the program.
Thanks for having me.
And this is very good news coming in yesterday. You know, when we talked about wrapping the week up, the CBN comes in with the Friday nuggets as usual, telling us 30 banks have now met the recapitalization requirements. During the MPC meeting, we thought we had about 20 banks that met recapitalization. So since the MPC, that was February the 24th when they made the announcement, till now, very impressive progress that have been made so far. And so they say that 3 are just in it, about finalizing, so probably have 33 banks probably within the week to come. But looking at what's happening with the banks now meeting this recapitalization requirement from the CBN, it's a breath of relief for investors, definitely, because a lot of people were panicking. Should I go to my bank and probably withdraw my money? Is this bank going to fail? But we see that it's also not just impacting sentiments, for investors, filtering into the NGX. We saw a rally in most banking stocks. But we want to know now that, was this rally we saw in stocks a real reflection of the fundamentals of the banking sector, of the stocks listed in the banking sector, or just optimism that the banks are going to meet their deadline?
Actually, there's one thing that I tell investors: every investment that gets expectation, gets the future. This kind of news, kind of gliding investors' mind and also help them to plan well. It's also a pleasure that to have liquidity in the system. This is a statement that Nigeria will have liquidity outside the financial sector for them to recapitalize easily. Investors adding more to them means they have confidence in our banking system. For me, kudos to the regulator and also to investors that also help to recapitalize this bank. But what will the bank do for the economy? That is the most important thing now. Now that the banks are sitting on solid fund, solid liquidity, strong, as we just mentioned in your intro, these banks are solid. This is the time they should play the role of a bank in any economy. We say that banks are the engine of any economy. Now our banks expect that lend to the world, to the risk sector. That risk sector is what will drive the oil that will also make every Nigerian feel good that our economy is also rebounding. For me, it's a good news for Nigerian economy, good for regulator, even for the government too. If you are in a kind of aiming a thing and you want something to support that, and for example, when the government said they are going to achieve $1 trillion economy, you need a stronger bank, you need a stronger PFA, you need a stronger insurance, you need all the financial operators will be strong to drive that move. For me, it's a development. That means from business, they pointed that the insurance sector can also be successful because I tell that there is liquidity to provide all these companies also to meet and also to drive the vision of the government.
You're talking about liquidity. Yes, we know the banks are awash with liquidity at the moment, but how does this impact or affect yields in, let's say, the money market versus equity markets right now?
Actually, the banks has the liquidity to play any part of the market, whether you are playing in fixed income or playing in equity, especially with the new structure of the banks, I would say holding structure. Now they have insurance under the banks, they have different financial firms
subsidiaries
under the banks. They can play anywhere in the market. But the main purpose of capital is to drive the economy. But the way they go, I tell you, if a capital market is part of the economy, today we say that capital market control about 33% to our GDP. That means that sector is also playing its role. For me, as the bank is solid, it shows that yes, the economy also move forward. If actually the banks will put money to work to the risk sector, I said earlier, because that is where we need this money, because we need company to expand. But what is happening today in the Middle East might change the dynamics of everything the Nigerian economy was. I believe this time we want to test our economic managers if they will panic along what is happening, or they have their own strategy to navigate what is happening globally to keep Nigeria economy in the right path.
Definitely, looking at what's happening, we have to keep our eye on the external factors as well. But looking at the big banks, they're definitely going to benefit from this. this. They're strong enough. But let's look at the smaller banks that have not yet met the recap. Is this going to create like some gainers, winners in the equities markets in terms of stock performance?
Yeah, actually, like you mentioned, the big banks are already there. They've met the capital. But the small banks, like the national banks, they are coming up. The non-interest banks are coming up. No, they are doing about. It's now done on investors. That's why their price in the market, it just tell you a story. Now, if a bank can move from around 4 naira to almost 15 naira in terms of price movement, whether they are capitalizing or not, with the bank fundamentals sustain that 15 naira price, if the capital will help them to put a better earnings, that's what the practice where all the capital will also become a plus for the market. One thing that not just you're capitalized now, your price has gone to 15 naira or 20 naira. We need you to sweat that shoulder because investors have invested. You also now it's also for you to convert that money worth into business and post a better number that the price will feed on to go higher. That is it.
So what's going to happen to? I'm sure a lot of people want to know what's going to happen to those banks if they don't meet the deadline. What do you think?
No, if you look at the banks that are not going to meet the deadline, these are banks that are owned by CBN. CBN can dash any bank that are aware to just like what happened in what's it called, Providus and Unity Bank. The CBN know how they go about the marriage. Also, the remaining ones, you can know how to marry them to Indian banks that are solid. For me, that is not a big problem at all because they are owned by CBN. They are run by CBN. Then they start to dash it to whether Zenith Bank or say Zenith Bank. Okay, acquire this one to be part of you so that I can know. I can give it to what's it called, Women Bank or to Fidelity. For me, those banks that are not managed by managed by the investors, since they are in the hands of the CBN, like a bank like what's called Polaris, Keystone, things like that. For me, any day, speaker can go, it's okay. Women Bank, come and take this bank, and we'll support you to turn it around. It's as simple as that. There's no need of us panic because the bank that met it can run the economy.
Definitely. So if we're going to see banks are now capitalized, we're going to see like a correction post deadline after they meet, maybe after March the 31st. Are we going to see investors start maybe selling on the stocks? Maybe moving on to other instruments or any other asset class?
For me, I won't see that because if you look at Nigerian market, the most considered sector that have really rewarded shareholders is the banking sector. Yes, with this activities, they bloat their share in issue, which I believe that before the year runs out or next year, I do share reconstruction, and that's just a support for investors because you now see more value. For example, when IBTC, Islamic activity came to the market to do share reconstruction, since that day to today, their price have stayed ahead of what they did. That means if performance have straight applied to where it is today, if other banks go to that route, do share reconstruction, and they are doing well, the price also remain above. For me, it's only a few companies in Nigeria that I know that have done share reconstruction, they are selling below that price. But for the financial sector, I see a lot of potential because of what the role they play in an economy.
I mean, we'll just keep an eye on what banking sector still has in store for investors, or possibly good things. Yeah. But let's turn our attention now to Union Dye Consult. That company has been problematic for some time now, been inactive, that's the keyword, dormant for some time, and they've been placed on the NGX delisting watch list. Yeah. But right now we see them in the news coming out saying that they have plans for recovery, they want to revive the company, and they also say that the key indicators, what key indicators should investors be watching out for here for this company? Is this plan realistic? This plan by Union Dye Consult to turn around several years of inactive operations and possibly turn investor sentiment back to positive. Is this something realistic? Can it be achieved?
Yes, it's possible. But one thing you should know that equity was created cannot be destroyed. Since it's an equity and they're able to capitalize their company or revitalize their company and come back, they have a long way to go. And I believe that the sector where they operating, that salt is very essential. Despite that, whether how big you are, how rich you are, it counts because you are rich, want to buy more salt. But because it's essential in life and people need it, that means they have a demand that their product is there. It's for them to come back to the main business and strategize and see how they can put the company. I believe that they can do other things apart from the salt, especially, if not that we're seeing a lot of changes with what's happening in the world. We're seeing that stability in FS, inflation coming down is a plus for consumer goods. If not that the relative going to change because of tomorrow. Yesterday was about fuel price going as high as almost 1,000. That will change the dynamic in the market because of that will go to cause a lot of inflation going to the future. But I believe that economic managers should know how to play around it. But I know that it will take time before we start adjusting again. But I tell you, it's only because of this inflation what people are afraid of that will slow down consumption. But I tell you that as a also investor, whether there is inflation, there's also companies that are going to impact positively because of inflation, because they're able to pass their price to their consumer. That means, in fear of inflation is also an opportunity for those in the market to navigate and also look at sectors where that this inflation will also impact their performance, because when you're able to push your price to your consumer, you're going to make more profit.
But there's one major concern though. The company says they're unable to reach their major shareholder, that's Ames Limited. They're now reaching out to the shareholders via the media. This talks about some kind of governance issues here. How could this affect their ability to avoid the listing? Because if they can't reach their major shareholders, how are they able to move past that corporate governance issue and move to compliance, as the NGX has said? They've given them 2 years. They're on hold for 2 years to be able to meet those requirements. But how do you think they can avoid the listing at this point in time?
Now they are going to roll out their plans to recapitalize the company or to back to stream. I believe that, like you just mentioned, they want to push hard to meet their core investor. They can't win their core investor out or away from this. They need to have way to get in touch. And also, if the core investor that kind of invested in the company all this while, but now good news are coming, they're going to revitalize. It's also be part of them and also be happy also that where they put money, life is about coming to that company. But let them push hard to get to it. But NGX also, as a way of also giving them a more time, kind of extending their total to see if what I said at the beginning, that equity once created is hard to destroy. For that, if they are coming on board again to come back to life, you give them kind of we'll call it a life support, so that they can move. For me, that is what we accept now by NGX to do, not to just push them out of NGX, since they are making move to come back to production and to come back to business.
I'll definitely keep an eye out and see if there'll be a turnaround for Union Dye Consult. But we will take a moment here. Capital Markets continues right after the break. Stay tuned. Don't go away. Welcome back. If you're just joining us, you're watching Capital Market live on Channels Television. Now we're just discussing investors and what's happening in the market. And investors are definitely keeping an eye on the Nigerian Exchange, because unusual price swings, we saw that this week, and that's last week, and liquidity concerns are sparking questions about market integrity. Are these potential price swings, are they price manipulations in the market? And what are the warning signs that we need to watch before buying into fast-rising stocks? Ambrose Omordion, Chief Research Officer, Invest Data Consulting, is still with us in the studio, and he'll be breaking down what these alerts from the NGX mean for ordinary investors. Ambrose, the NGX has flagged several companies, about 8 companies, for unusual activities in their trades, having low liquidity, basically low stocks on the market, low floats, that's the word. And unusual price swings, because prices are rising, astronomically for these stocks prices. Are investors, or should investors be worried about integrity in the market at this point?
Yeah, not to be worried. If the regulators are coming out to point out, that means they are looking at the market, they are not sleeping. That means they are, as a watchdog, they are really watching what is happening. That means they are not telling investors follow the right path. And that is why I say the strategy to adopt in any kind of environment where you see that there's kind of, or you sense there's price manipulation, it is time for you to target fundamentally sound stocks, good companies, good fundamental issue where you focus, and also be informed about what is happening in the market. Follow some signs that from NGX. For example, they will say that, this company, they put a sign below listing requirements. As investor, because at the front of that, when they say below listing requirement, it sends a signal that you that invest in also have to go and find out. That means there's some deficiency in this company. That's why NGX have put it clear there, below no listing requirement. It draws your attention. They are not sleeping. They're trying to make sure that every investor are seeing the red flag, so that is why they want to make a decision to fall in that part. That is why when they put alert, they said watch, invest with what company has fundamental. Don't just follow sentiment alone. Yes, sentiment work in some situation, momentum work, but for you to really take advantage of the market, you must buy into company that has fundamental that you can also be sure of tomorrow they will be there. There are some things that can move today, the next day price have gone down, not going to take it up. But a company that has good fundamental, because the earnings are coming and it's improving, price will move gradually with that strength of the earnings, because it is earnings that price feed on. And if it's consistent, but when a company rally without earnings, price also comes down as pack of salt, because nothing has put that price up.
Now, we just don't want to be naming names of companies here, but basically we know that Zichis is one of the companies that was listed there. And now that these companies have been, flagged for breaching these free float, rules, how risky is it for investors already in these stocks, especially in terms of liquidity for these companies?
You know, when you see a market where you are sensing, some of this price manipulation, the strategy they use, what we call pump and dump. That pump and dump is that price will just go up for some people that in that stock to exit. You that are either you are a newcomer in the market, you don't know because the price is low. You feel, oh, I have first traded that stock that moved from 2 naira to 4 naira, I've given to 200%. You will not buy in. That's why they are pumping it. As you are jumping in because there's no fundamental. When they stop pumping it, you're going to get yourself hot because what the price start coming down and nobody will pick it for you. That is one. Another thing is that when the activities, when the some other shareholders, where you are under a closed period, you are still some things that have been happening within this closed period. It's a sign of that also shows that there is also manipulation, and these are what regulators are watching, and also they are flagging companies that are also doing that so that they can see. About 12 of them, they mentioned that within their closed periods, some activity was going on between the insiders. That means they are watching the market, and that's the work of any regulator. For me, I'll say that NGX and SEC, they really season up to their responsibility to what is market so that investors be guided. That confidence that's supposed to be in the market should be built and also be strengthened. For me, I think the regulators are doing well. Trying to flag so that if you are the one that will take that risk on your own, same people alerted you, this is this, and you refuse to follow the alert, anything you get from that kind of investment, that means it's your own. Because they are saying that follow fundamental stand stock in the market and invest for the future. But because you want to make quick money, you just have money and you don't look where to move, now come to the market and buy anyhow. Because in any market of the world, there are strong companies, there are weak companies, there are companies that about all of them on the exchange. But that's why the good, the bad, and ugly on the exchange, but follow what the good than follow what the ugly. That means in the market, that's why knowledge is key. And that's why even SEC and NGS also to do more education that people will know the kind of stock to put their money.
Okay, so but how does this low free float affect price discovery? You could just explain that very quickly, and also the ability of investors to be able to exit and maybe enter these stocks.
When you have low float, let's put it that way, that means the share is in few hands. Then companies that have low float can easily be manipulated because the stock is not available. People judging that stock, it can move up at any time because it's not available. If you have a good float, you can also balance your trade, and that is why companies can use it easily to manipulate price because the stock is not available because people are rushing for the stock. It's not available as expected. But that's why NGS make a rule that you must have 20% float for the market. But most of the market, most of the stock on the exchange, some have 5% float, 10% float, 15%, which also below what the NGS. That's why they are flagging those companies that yes, you need to meet up. And also, when you are such stock, also you can be trapped in such stock because there's no liquidity. You are the one that move the price up. Because the stock available is not there. That's why that liquidity issue become a problem because stock is not available in the market for people to buy in volume. That's why for liquidity trap, you have to also be very careful. Company with low float also can be also a dead trap.
You mentioned that some stocks have like 5%, 10% below the requirements. Does this tell us something about NGX's ability to regulate the market?
No, that is why they'll give you the period to say either 1 year meet up your flow. It's possible that they will accept you when you are coming because also we are encouraging companies to come to the exchange. As you are coming also, you are at the beginning you have 10%. It's okay. We are giving you another 2 years to make sure that you release your people. It's part of encouraging people to come to the market, but it's not that they are sleeping. Their eyes is on it.
Okay, so what are the warning signs that investors, somebody who's a novice, doesn't really know much about stocks coming in, how would they know stocks that are probably low in terms of free floats? And what should they be looking out for? What are those warning signals that will help educate them that, this stock, I should beware and possibly go for something else?
Now, when you want to invest, you see, like I mentioned earlier, a stock that has at the point, you see a red sign below listing standard. That should send the signal that
is that always listed indicated in all stocks you want to buy?
No, it's already listed. The ones you buy, the ones that are free, that their compliance is total. You won't see anything on them.
Is this I'm talking about the brokerage houses that's
you that is going to buy stock that I want to say buy, you have to know the stock. But that's why I say education is key. If you want to buy a stock, look at NGS, they put it there, they know that they are hiding it and they tell you the full meaning of that.
So they should go to the NGX website.
Yes, you go to there and get information. Also, you will see that when you open the NGX, you see those stocks with all those signs. Then that will give you, that kind of give you some concern that I want to put my money here. This time, what does it mean? That's why you need to also consult professionals. Okay. That's why your stockbroking firm is there. Ask your stockbroking firm question. That's why they are there to guide you. They will tell you what that means, and okay, oh, look away from this stock now, move to this one. There are some stocks that not telling because they were able to comply, they release regularly. Because you can see somebody that has a company that, oh, this company has not complied with result. You stay there. That is what I'm like. Then you also, oh, if I'm not seeing a company result, how will I know how they perform? It's just like when you send the child to school, the child will come out, with a report card at the end of the day. You know that, oh, for this term, my daughter has done well, my son done well. If a company at the end of a quarter fail to give you result, this one quarter, and a year, 2 years, no result, for me as an investor, I will not look at because you don't know what is happening in that company. The result tells you what the company is. And if the company is not the result, you have to also stay back and see until you see the result. These are signs that that's why it's good for us to look at fundamental, consult professionals in the market, and also stay informed.
And just one last thing, could these repeated warnings from the NGX actually impact or affect investors' confidence at this moment? Because when we see this confidently, will confidence be in the market for investors?
No, the one people are calling me on that. When the market is rallying, if there is any information that will make a stock to rally or the market to rally, that's fundamental. And so when the market wants to also slow down, there's also information that will slow it down. So NGS have seen the market the way it rally. And when they cross the 100 trillion naira mark, they saw the market moving. Yes, we are becoming another first in Africa in terms of market. Then you need to also, yes, let's really look at what is happening.
Okay.
That caution is necessary.
Okay.
It's information that puts the market up. Also, it's an opportunity for those that are in the market to see that, oh, we need to look at companies we are buying with eyes open and with knowledge to buy into value. That is important. They've not done something wrong. For me, it's a welcome development so that you know that people in the market are getting what? Alert to come invest in the right stock, because not all the stock in the market has the same fundamental, the same quality. That means you need people that will give you money, and also your investment objective also should guide you the kind of stock you should put your money. Because we have dividend paying stock, we have good stock, we have defensive stock, we have also high cap stock, we have low cap stock. Then it is your investment objective guide you what kind of stock should I put my tent and also go with.
And definitely investors should always keep themselves informed. Very insightful, very insightful advice and very good advice for investors. Thank you so much, Ambrose Omordion, Chief Research Officer, Invest Data Consultant. Thank you for your time, always. And that's it for today for Capital Markets. Always know that whether the market is bullish or bearish, knowledge is always your best investment. Keep learning, keep growing your financial survey. I'll catch you next time. I'm Will Ibong, and thanks for watching.